You're looking at a weekly chart of the Aussie dollar, and I just wanted to walk through very quickly how we can use a high time frame, such as the weekly time frame, to try and gauge the directional bias. Because once you have the directional bias, then it just comes down to entries, which there are plenty of models that I have provided that you can use to enter. But the most important is to know directional bias, because after that, entry is easy. You can just enter at the right time on the right day of the week. Okay, so I want you to let me just expand this a little bit. I want you to look at what we're looking at here. So each one of these bars represents a weekly range. Okay, here this most recent bar on the right hand side is the current week. Okay, so that's the current week that we're trading in right now on the Aussie dollar. Today is the last day of the week. It's Friday. I want you to look at where this week opened. Okay, this week opened up here, right at where we are right now. So Monday starts the week. So Monday opened up right up the top. Okay, and when Monday opened up, we had a gap in the market because yesterday, the week before, the high was down here. Okay, let me actually put a line, see if I can put a line there that stays on the chart. So let's just draw this line here. Okay, so that was the previous week high, and that was the previous week high at the open of Monday. Okay, and Monday opened up right there. So during the week, what did we do? We retraced, right? We retraced down to the high of the previous week. And we did that to balance the market because prior to the opening of Monday, prior to this entire retracement, there was a imbalance in the market. Okay, Friday closed with this. So just take away, let's pretend that this current week has not traded, right? So just imagine that bar's not there. So Friday closed, went through and closed up here, and it was completely buy-side price delivery. Okay, from this high of the week before to where Friday closed. Remember, we ignore the current week, just pretend that week is not there. There's a massive imbalance there because price has only been delivered in that week on that bar to the upside. And there needs to be a rebalance in the market. And therefore, the current week, when it opened up here on Monday, we see this retracement all the way down. And notice that we don't even completely fill in that particular imbalance. We don't completely rebalance that market from last week. We still have an opening there. Okay. Now, once we do that, we come down, we immediately go back up. And therefore, we refer to that as immediate rebalance. That actually indicates strength in the market for two reasons. One, we could not completely balance the market. We still left an opening there. And number two, we have immediately in that same week gone back up and basically gone back up, and it's an immediate rebalance. So we've come down, immediately rebalanced, and going straight back up. Okay, so to me that is a bullish indication on this week. Now I want to drop down into a 15-minute chart. I want to show you why I look for reversals on the Wednesday. Okay, this should open up some of those thinking pods in your brain about my reasoning to look for reversals on Wednesday. Okay, so let's drop down. Let's actually drop down to a 15-minute chart now. And what do you see here? Where are we? 15-minute might be too small. Let's go down to an hour. There we go. So we can see this better. Now, notice, here's what I want you to look at. So there's that dotted line where I have marked out the high of the previous week. Okay, so quickly, if I just go back and remind you, the dotted line is there. Okay, that dotted line is the high of the previous week where the current week came into. Okay, so I'm going to go back to the hourly chart now. Now, here's what I want you to look at. So where's Monday on this? So there's Monday. That's the opening of the week. And look what we've done. Monday, Tuesday, Wednesday, we've traded back down towards that high of the previous week. Why have we done that? To rebalance. So you've got to have the higher time frame analysis in the back of your minds to know why the market's moving in a certain direction. The market only moves to meet an objective. Okay, in this current week, the first half of the week, the objective was to go and rebalance the market. Okay, and notice that it's come into this little gap here as the place for it to stop. Right? There always needs to be a reason for why the market has stopped where it has stopped. And it's trying to move this across. There we go. So you can see right there, the market's coming to that gap. You'll always find something on the left-hand side when the market stops there, but clearly you can see it's right near that weekly high from the previous week, and that was a requirement because of that huge up candle in that last week that left a massive imbalance in the market. Now, isn't it amazing that it's come down on a Wednesday, and that's when I look for a reversal, and that's where we have a reversal, and now Thursday, we're starting to move back in the direction of the higher time frame. Okay, so that's why Wednesday gives us a reversal, and now Wednesday, Thursday, Friday should essentially be the backside of that range to now go back up and essentially move in the direction of the higher time frame, which in this case is bullish, right? You can see all these candles. This is back to the weekly chart that we are bullish. Why are we bullish? Because the market has already come down and has already taken out the lows right over here. So that was the lows, and now we have changed direction okay, in May. So right there, this is May, and now we've changing direction, and now we are heading higher. And the liquidity, or where everyone's stops are, is up at these levels here in the immediate short term, okay? And so you need to kind of have that in the back of your minds, because you need to have some kind of directional bias in your trading. So when you're looking at directional bias, you got to know where is the market coming from. That's number one. You got to know why did it go down? Is it going down, or has it gone down to take out a low or to rebalance some level of inefficiency? Once it's done that, then is that a bullish candle? So this is a bullish weekly candle, okay? And it's coming from a level of imbalance. And so that's most important. Just like here, when the market's gone down and now it's going up, where has it come from? It's come from taking out a previous low. And that's why we're bullish now. So what's it reaching for now? Well, it's reaching for some of these highs that we see above, okay? And this current week, okay, what has the market done? Well, it's opened up high, okay? It's opened up at a high, and it's had to go down, and it's done that Monday, Tuesday, Wednesday to rebalance. And then Wednesday, Thursday, and Friday, we're back up to where we've opened. And the expectation is, in my view, that we continue higher and take out not just the current week that we are on, right, where this opened up on Monday, but also the high of last week, which is probably Friday. That's a Friday, right? So then what I look at is, well, that low back from March, okay, is pretty close to the high. Sorry, that high from back in March is pretty close to the high that we have for last week, and they're relatively close together, and so we call that relative equal highs. And that's why I've got my line up here, because I believe that that's most likely the draw for the current market to draw into. We may not get that today, being Friday, but I think that we should be able to at least get the high of last week, which is Friday, and maybe we will reach up to there, given that today is a heavy news day as well. News days are important because the market makers inject volatility on news day, so you got to be on the right side of those moves, okay? So hopefully that helps you with identifying your directional bias. Remember what I said, the most important thing is to know where you're coming from, okay? So it's not that the candle is bullish. More important is where have we come from that's making this candle bullish. Because once you know where you're coming from, that gives you more confidence in your directional bias. Because if we, for example, down here, we've taken out a key low, then we've done our job down here, where there's no reason now to come down there. So the move now is to the upside. And even on this particular week, where the market opened there, you can see that there was a level of imbalance from the high of the previous week, where the market has come down into and gone down a little bit further to closer to the open of that previous weekly candle, and then retraced back up. Okay, so something similar is happening on the current week. We've rebalanced from the previous weekly high, and then pushed back up. Okay, so we're coming from the lows, and moving up, and now where are we reaching for? What's the market reaching for? In the current week, we've come down to rebalance, immediate rebalance, so we've gone back up, and now we've got a number of points of interest where the market might be reaching for. Okay, so I hope that helps. I will now talk with you in a future video.